The Yes Bank Meltdown, the Enforcement Directorate has registered a money laundering case against the founder and former MD of Yes Bank, Rana Kapoor, under the Prevention of Money Laundering Act. Now, the investigative agency also, late last night, searched the residence of Rana Kapoor, and this comes after the RBI put the private sector lender under moratorium and suspended the bank's board for 30 days and put a deposit withdrawal limit at 50,000 rupees for a 1-month period. This moratorium came after Rana Kapoor promoted bank failed to raise capital to address potential loan losses and in the wake of deteriorating financials of the bank. The Finance Minister announced a restructuring plan for Yes Bank, and now the State Bank of India is going to get a 49% stake. The Finance Minister said that while deposits and liabilities will not be affected, the governance issue at Yes Bank is indeed a matter of concern. Now, what is this restructuring plan going to look like? Vishnu Shom tells us more.
Let's firstly talk a little bit about the rescue plan that they actually have at this stage. The RBI's restructuring plan for Yes Bank. Well, the SBI, the State Bank of India, will be investing and will get a 49% stake. They cannot reduce below a 26% amount for a period of 3 years. Now, there will be a new board which will take over the functioning of Yes Bank. We are told that that's going to take place within a period of 30 odd days, so in a very finite period of time, and that the deposits and liabilities of those who have an involvement in the bank as depositors or as investors will continue as before. There will be no change in the offices or branches, so this is an ongoing concern, which is one of the reasons why it's valuable in a sense to the State Bank of India as an investor. The employment and salaries of staff is assured for a period of at least 1 year. So that's what you have in terms of the restructuring plan itself. Well, let's look at those big questions. The 5 big questions as far as the Yes Bank crisis is concerned. Question number 1. Despite the PMC bank crisis last September, why did the Reserve Bank of India and the government not intervene in Yes Bank earlier to protect depositors? Now, remember, there was already somebody who was posted over there from the Reserve Bank of India to oversee the functioning. But why has that taken place so late? Question number 2, why were bad loans allowed to escalate so much? A lot of people pointing out that even when there was the shock of demonetization happening, when there were economic problems in the country, the overall value of the loans taken by Yes Bank was growing. How was that taking place, and why was there no oversight? Point number 3, or question number 3, when Rana Kapoor, who was the founder of the bank, the promoter of the bank, was denied an extension, was his role probed there and then? And the reason that's important is because the Finance Minister today said that there is a process to which she wants answers. Who is accountable? Why did that process or the probe not result in action earlier on? Question number 4. What was Rana Kapoor's successor, Mr. Gill's plans for a revival? Did any board member object to Gill's plans not working out? And finally, the bank's efforts to raise funds failed. What went wrong? Why did the Finance Minister today say that, look, by November 2019, it seemed that nothing was going to happen. This bank was going to be on the verge of collapse.